Hey everyone, hope you're well and hope you're having a good week. So let's get straight into it. We've got a few more stories about some of the stocks that I hold that might be of interest to you. I've also linked some additional stories that I haven't covered in the video down below in the description, so feel free to check them out. And also, as always, we're going to do a portfolio review at the end of the video, so stay tuned for that. Hey everyone, thanks for sticking around and my name's Ben. Please remember to like and comment if you find anything in this video useful. It really helps me out and I do appreciate it. And also if you haven't yet subscribed, if you could give it a consideration, potentially subscribe as we do this every week. So our first story is around Abbvie. I've got a report that I've linked below, which is from the Nasdaq, which is where Abbvie have yet gone into another agreement, this time with Caribou Bioscience, with an intention of creating 2 new CAR T therapies. These will be designed in an attempt to retrain T cells in the human body to help them target cancer cells. The information also touches on a variance between Abbvie and the general industry. Looking at this, we can see that Abbvie shares have gained 6.3% in comparison to the industry, who have only increased roughly around 3.1%. This will be the latest collaboration of the company following the recent Allergan deal, which was valued for around $63 billion. All in all, this seems to be a reaction to the increasing versions of Humira that are appearing on the market from other suppliers. This medicine belongs in a group of TNF blockers, and what TNF blockers do is they specifically target TNF and blocks it from acting within the body. What this does is it actually helps the body to reduce inflammation and also reduces and relieves the symptoms of Crohn's disease. Abbvie saw great uptake on this medication, with the revenue from this product moving from about 7 billion in 2011 up to nearly 20 billion in 2018. However, if we look at the 2019 figures, we can see they've actually reduced, and personally I'm expecting that to continue to reduce over time as more of these products become available from alternate suppliers. So that's the story on Abbvie. What do you think? Are they doing enough to mitigate the loss in the potential market share of this product? Do you think by picking out other areas and purchasing other companies and other deals they can make this up? Let us know, comment below, and we can have a chat about it. So moving swiftly over to our next piece, we have a nice story about everyone's favorite cryptocurrency, Bitcoin. So it seems that now we've got Elon Musk offering everyone to buy a Tesla through Bitcoin. Fair enough. He's a bit of a pioneer and we expect that. However, Apple have now moved into the room and they've allowed you to use your BitPay card and transactions through Bitcoin on their Apple Pay system. So for this, you will need a BitPay card, but you attach it to your Apple Wallet, the same as you attach any other card, and then majority of stores will allow you to pay with that through Apple Pay, therefore using your Bitcoin to pay for products. That's how I understand it. Obviously, feel free to check it out. Let me know if you see anything different. The advantage of this being from BitPay is you have access to a wide range of cryptocurrencies. This is including Bitcoin, Bitcoin Cash, Ether, Gemini, and USD Coin. There was also a comment in the report from the CEO of BitPay who commented that they would be looking to add this to Samsung Pay and Android Pay in the future. So that's always good to know. There is some speculation that through integrating Bitcoin payments, Apple may be able to generate an additional $40 billion per year. Now, I quite like the news and the information that this is going. I'm quite a supporter of Bitcoin. I like the idea of it. And the fact that more and more of these companies are picking up may imply that the price may continue to go up on Bitcoin, which I'm not going to complain about. I just need to buy more before it happens. So what do you think, though? Would you be happy for buying general things with Bitcoin? Or is it a bit too unstable of a currency to use at the moment, even though it's a nice thing to be able to use if you wanted? Our third topic for the day is a quick one. I like to throw a quick one in there for you, just so we've got a little bit additional to talk about, but it's not a very in-depth story, so it's not going to take up too much of your time, but it might be of interest. So, we've seen that Zacks Equity Research has released another report, and this time it's around Axa. It seems that Zacks Equity Research has now listed Axa as a grade A company in the value category. This is evidenced by their PE score of 6.82 compared to the industry's PE score of 8.66. They also have a forward PE being as high as 9.2 and as low as 4.18, with a median of about 7.3. The report also looks at the price to book ratio and compares that to the industry. We can see that Axa itself has a 0.69 compared to the industry's of 1.02. So if this is something you wanted to check out, there's a bit further information, and the ticker symbol is AXAHY. So if you want to look in a bit more depth, that's the ticker symbol to do it. So told you that one was quick. Let's move over to the last story and then we'll get on to the portfolio update for you. So for the last topic in the stock news, we have a story from Carnival Cruise Line, who seem to have released a large amount of senior unsecured notes. These unsecured notes are paying a rate of 5.75% per year. These notes will be unsecured and have a mature date of March 2027. The value has been estimated to be around $3.5 billion. Carnival Cruise Line expects to use the net proceeds from the offerings of these notes to make scheduled principal payments during 2021 on their outstanding debt, and also for general corporate purposes. These notes, however, aren't being offered to everyone. You and me most likely won't be able to go out and buy them, because in the report it also states, these unsecured notes are being offered only to persons reasonably believed to be a qualified institutional buyer in reliance with Rule 144A under the Securities Act of 1933. So that could be viewed as a concerning thing from investors' point of view. They've needed to go out to raise an additional $3.5 billion just to pay off existing debts and also corporate purposes. But besides that, what do you think? Is this a ship that's sinking, or is this a ship that you're hoping will get sailing again soon? I think they're going to pull it in. I don't think they're going to have any issues actually claiming this money, but it is concerning that they need to claim it with the pandemic going on. So that's everything on the news front. Obviously, let me know what you thought down in the comments below. Was there anything you knew already, anything you didn't know and you were interested to find out about? Also, if you haven't already, please take the time to subscribe. I'd really appreciate it. And let's get on with the portfolio update. So jumping over to my dividend portfolio, looking at the changes for the last week, we can see that I've had a portfolio value change. Last week I sat at around £2,175, whereas this week I ended on Friday with £2,198. So that works out as about £20 in portfolio value increase. However, if we move over to the return, we can see that last week my return was 4.57%. and we've moved up to around 5.08% now. That means that I've gone from about 95% up to around 106% up. So roughly £10 worth of my £20 increase is in gains, which makes sense as I put a tenner into the account earlier in the week. So that brings us nicely over to our buys and sells. This week I didn't sell anything. Don't sell anything very often. I think the last ones I did was Cineworld a couple of weeks ago because they had a bit of a shoot up in their price, which was always good. However, this week I did buy one share of GSK. It came to about £12.79. They have seen a bit of a drop recently over the last couple of weeks. Since February, really, they kind of dropped. They just fell off the end of a cliff a little bit. But I haven't actually seen anything that's too concerning for me not to want to pick up another share. They are due to pay out a dividend in April, with the ex-dividend date being the 18th of February. So therefore, I thought I might as well pick it up now as the price has dropped and it's before the ex-dividend date. This brings my total position of GSK to 5 shares, and they're expected to pay about 19p a dividend. So I'm hoping for an extra £1 in April. So talking of dividends, see, don't you love my segues? Last week, we only had one dividend, and that was on the 8th from At&t. They paid out a simple 16p, which went into buying GSK. So thank you At&t for helping me buy a drugs company. And that's it. I haven't actually made any other changes to my portfolio. I very rarely sell things. I do a lot of my buying at the beginning or end of the month, depending how you look at it. So a lot of my things happen then. The weekly one is more just so that you can see what I'm doing and anything like that. So if there's anything you want me to include in this section that isn't just the price change, the value change and things like that, please let me know. I'll touch on it. I can get the laptop out, get the spreadsheet, and we can touch on little bits every week. I just don't want to bore you with a load of information that you really don't care about. So please comment below, let me know what you want to see, and if I can do it, I'll do it. And thanks for joining me. I'll see you next week.